Hey everybody, welcome back to Ryan Makes Sense. Today we are looking at Vale. Just kidding. It is Vale. It could be pronounced Vale. I just hit my 100-day streak on Duolingo for Espanol, so I'm feeling a little bit spicy. So we're looking at Vale. It's a Brazilian mining company. Um, yeah, we're gonna see if the stock deserves to be $10 or higher. We can see it's kind of been on a downtrend. Actually, you can't see it because my big head's in the way. We're gonna look at what hedge funds and institutions are doing. We're gonna be doing some advanced charting on Thinkorswim, and let me see if my past self can be rewarded. All right, I have charted this one before, so we'll have something to go off of, kind of, but we'll kind of start from scratch to get a really good idea of where and when we can expect Vale to hit certain support and resistance. And we're going to go ahead and hit that subscribe button as I shrink my head. Okay, we'll go right there. All right, so the stock is currently trading around 10-ish dollars. Um, I do want to look at all these gaps because a lot of foreign companies outside the US, if you have not noticed already, you will notice if you look at charts often that the opening candle for the day will typically go up or down. It won't open exactly where it closed the day before or be slightly off. So we can see, like, over a normal day, we'll start over here for some reason, end of October. You can see it, candles open, jump up, candles open, jump up, jump up, jump up, jump up, jump up, up, and then just it kind of trickled down, 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 down. But you can see the gaps between the candles. So I'll go back and I'll look at potential gap ups that are important if the stock meets the criteria of not losing more money than they're making, and if we have a good, decent stock price, we're going to see what institutions and hedge funds are doing. So I'm going to go ahead and load this right here. And we're going to look at the bigger picture because that is typically what we do. We look at the bigger picture, the grand scheme of things, and then we whittle our way down and find key areas of support and resistance. Um, so yeah, looking at the stock, it's trading at 1027. It's trading at the same levels as it was back in 2007. Has the company done better since 2007? And we're going to take a quick peek here. Uh, oh wow, they make billions of dollars, and they're likely doing much better than they were in 2007. However, they have really plateaued from 2019 to 2023. We don't have 2024 data yet, so we'll be cognizant of that. Their sales are on track for 42 billion. So their trailing 12-month revenues are looking to exceed 42 billion, which exceeds 2023. Their price to earnings ratio is a 4, which is absolutely incredible. Gross margin 40%, that is freaking fantastic. Profit margin, that's great. They have a dividend of 10%. Um, I don't agree with that because their quick ratio is a 0.73. And what they could do to make themselves more appealing is, instead of paying out their free cash to shareholders as a reward for holding, stop the dividend, hold on to the cash, make your company more robust, strengthen that balance sheet, add to that cash pile, make yourself have a better posture, whether that's for mergers and acquisitions or for investors, traders, quants that look at quick ratios. So whoever the CFO is of Vale, um, come on, the dividend, like, put the money towards your business. Other quick glances, they do have debt. They are addressing it slightly. Sales in the past 5 years positive. EPS past 5 years positive. So it shows some resiliency. A lot of shares outstanding. This is going to be very interesting. However, take a peek here. This is very good. Although we're at 4 billion shares, what this could mean, and this is just, I'm just some random person on the internet, as the years continue to go down, you see from 2019 to 2023, the shares outstanding continue to go down. Once they go down far enough to where the supply and the demand, where the demand is much more than the supply, we could see the stock price really potentially move to the upside or the downside, depending on institutions, hedge funds, and people like you and I adding to this stock. Um, so yeah, let's pull up my proprietary calculator. I do want to see what we get. So they do have a market cap of 43 billion 868 million. They have income of 9 billion, so quite a bit, 730 million. Fantastic sales of 42 billion. Their sales are almost larger than their market cap. That's insane. Okay, so now we're gonna go down to their cash and their debt, and we're also gonna see what's going on. Okay, so for Q1 this year, they did 8.4 billion in sales. Same time last year, 8.4 billion. So they beat by 17 million this year. Second quarter of 2024, they did 9.9 billion. Second quarter of 2023, they did 9.6 billion. So that's an increase of about 270 million, give or take. That's pretty cool, I think. If I did, I mean, you do the math, but you get what I'm getting at. Let's look at their gross margin is at 30. So their gross margins have taken a hit overall. Their gross margins are lower than they were back in Q1 and Q2 of 2023, unfortunately. Um, but it could, I mean, yeah, I'm not going to try and defend it. I mean, I don't know why, but whatever they're doing, I guess it's working. They spent 5.9 billion to make 9.6 billion back in Q2 2023. This year they spent 6.4 billion and had 9.9 billion in revenue. So actually they're not getting more efficient because they spent an extra 405-ish million to make an extra 270 million. So people who are paying attention to those kind of things, water break for everybody. I mean, yeah, people pay attention. So interesting. They're becoming less efficient. Their margins are not getting better. They engage in the production and exportation of iron ore, pellets, manganese, and iron alloys. Operates through the following segments: iron solutions, energy transition materials, coal, others. Iron solutions segment includes production extraction of iron ore. Okay, so company was founded in 1942 in Brazil. Okay, we will see if any of the C-suite or executive officers are buying. We'll look at the institutions and hedge funds activity there. But let's finish up our stock price calculation. Sorry, I'm going off on tangents. Okay, so cash, they have 6.5 billion. Where'd you go? So if they have 6.5 billion, 6,545,380,000. I also do need to check. Don't forget to do this right down here. Make sure it's in USD. Finviz has been pretty good about updating, but sometimes it'll be in a foreign currency, and you go through your whole range of calculations, or at least I do, and then I see it's in another currency, and I'm like, oh, so I got to redo it. So, total debt. Yep. Okay. So, 14 billion. So total debt 14 billion 54,500,000. All right. And now that takes us to actually total assets 86.8 billion. Total liabilities 48.2 billion. That is a wonderful, non-alarming bandwidth there. So that is good. Going on up, going on up. And we have 4,300,000,000 shares outstanding. And I do want to just note the company is giving away about 10% of their free cash flow That is not reflected on this calculation. So whatever price target we're potentially getting here, it's going to be higher than normal because it's not accounting for the cash that the company's giving away. So it's saying the stock price of $20.49. Analysts have a price target of 15.62. Yeah, I mean they have, yeah, okay. So these are price targets from this year. So I like my calculation. If that is correct, we see institutions own 17%. I mean, this is basically a stock that's undervalued by 50%. If that is true, we'll see the 17%, we'll see more than a 17% essentially. However, if they are paying attention to how much money they are spending to gain that business, like what we just saw a few minutes ago, it's kind of a beige flag, honestly. So 17.2 is old data, new data is drumroll 19.42. And I do just got to call out, even though it's a small, minuscule percentage, it is on, it's reflecting for 4 billion shares. So although it does not seem like 2% is a lot for that amount of shares that are outstanding, it's quite a bit. So let's see if we have the Vanguards and the BlackRocks involved. We have BlackRock decreased negative 4.4%. Looks like they sold off 13 million shares roughly. Let's see what we got for Vanguard down here. And this is going to be a little scrolly. I apologize. I'm just trying to make sure I can pick this up. Vanguard. Okay. So we want to see, why is there only four? There should be a lot more. Okay, we'll do Renaissance Technology because we know. Renaissance Technology, they're always early to the party, but in this case, they are decreasing. Okay, let's try Vanguard again. We should get more than four. We're still getting four. Vanguard. So this Vanguard fund increased, this Vanguard fund decreased, this Vanguard fund slightly decreased. Interesting. So we don't have an overall picture for Vanguard, which is interesting, where we see BlackRock. Raymond James is also quite big. They trimmed 18%. 91 UK trimmed less than 1%. You see these new positions, sell out, new position, sell out, sell out, new position. So anyway, we do have an increase from 17% to 19%. Let's see where the stock price could be, because honestly, this appears to be a decent stock. Uh, on my to-do list is to get a new wireless keyboard and mouse, because you see what's going on. It's it skips, it lags when I hold it down. Oh my gosh. All right, so let's try this again for real. There we go. Okay. So I want to look at Fibonacci arcs. So we can go from this low to this high, and we're going to go from this high to this low. 43.76 right there to this low, which is 175. I saw it for a second. Okay, we're just going to go in and edit it. Okay. Perfect. Okay. So how well are these candles respecting the Fibonacci arcs? Great resistance here, perfect resistance. So basically starts right there, choppy. Great supports, also kind of choppy. Really good supports right here. Perfect resistance for this green candle. Perfect resistances for these three candles. Comes back down. Perfect resistance for this candle. Almost perfect resistance. Almost perfect support. Perfect. Well, not perfect. Um, so although it's not the cleanest, I think it is doable. So let's see here at 175 to this high 2278. Okay, 2278 is our high. So this is 175 and 2278. I mean, I believe it was. $174 is what it 174. Okay. So I mean, looking at the bigger picture here, um, we have this solid support that not only got tested when the company IPO'd, probably back in 94. Actually, I don't think Thinkorswim, if this company did IPO, it doesn't have the historical chart. But going from these supports all the way to 2016, is it possible that this stock comes back down and tests around $2? I think so, honestly. Um, and I don't say that because it's a bad company. I just think it's the overall trend. But we can see that this, let's see how well this stock is actually respecting the second Fibonacci arc. Good supports, good resistances, good supports, good supports, support, perfect resistances, perfect resistance on this candle, perfect resistances, perfect support, decent support, perfect resistances there, perfect support and resistance. And now we're coming down to our inner ring here. I mean, this is my cup of tea, honestly. And I don't say that because this company is ready for a breakout, but because this company, number one, I believe it's undervalued. Number two, it's going to continue to go down. I love buying stocks when they are on sell. I don't think this company's going out of business. They've been around since 1942 and they have their balance sheet is exceptional other than their quick ratio, which they need to cut that dividend. They may have already actually. Um, maybe. They've only offered one dividend so far this year. So very interesting. I do want to go back and check. Yeah, the momentum. So the momentum is going down. No surprise. Money flow. Um, I mean, historically, it's in the same range. We have this one exceptional month here, which was obviously an anomaly. And then the relative momentum indicators go down. So I personally, this is kind of what I would like, even though it's going down, and it'll probably go down to $2. And I don't say that to infuriate anybody, but I mean, this support has been around since two decades, essentially 2+ decades. If this stock can come back down to, let's see, extend to the right. Oh, this is beautiful. So two things. So this aligns perfectly with support coming down to 27, 28 because it happens to potentially break out around 2030, which aligns well with our periods of panic, which is right here. So right here, you can see me circling. We had COVID. We had the dot-com bubble. 1981 was right around the time. I did a whole video on this. I just can't remember. What was the 1981 panic? Recession? I don't know. So they had the recession. 1945, I think that was post World War II. Great Depression, I think was 1927. I spelled it wrong on purpose because Google will figure it out. 1929, which again, right before the Great Depression. So 2035. From 2032 down here to 2035, that's going to be our hypersonic time of growth again, another bubble. And Samuel Benner is taking credit down here. It's actually George Tritch who created this. But 2012 was our financial crisis. Coming out of financial crisis, if you bought a house in 2012, or if you bought anything you bought in 2012 and sold it right when COVID happened, you knocked it out of the park. Um, so I like to refer to this. This is one of my best performing videos on YouTube, actually. You can find it, type in periods of panic on my channel. Or if you type in periods of panic in Google, you'll probably see my video. So that aligns perfectly down here. I can dollar cost average on the way down, get a nice average, maybe $5-6, and potentially ride it up to something great. So I do think we'll see more downside, not because this company is bad or they're performing not well. I just think it's an overall trend, and I think Wall Street, institutions, hedge funds start to pick up on this. And we can see there is natural and organic appetite to own these shares right here. So that's all I've got for you guys. If you enjoyed this video, please consider leaving a comment, thumbs up, or a like. I don't know if they do likes or a subscription. Subscribe. Anyway, thank you. Have a great day. Bye.